Hey, great morning, everyone. I'm quite confident we all went through too much and achieved too much for good. I hope you're doing incredible. Welcome to the Daily Rip Live. It's Tuesday, August 12th, 2025, in the year of our Lord. And I'm here with the one Shy. Katie's out today, so it's me and you steering the commerce ship. Futures are looking delicious and delightful with the CPI coming out, my man. What are you looking at, my brother?
Yeah, I mean, it's a very, very green morning. I'm seeing QQQ up 0.5%, SPY being up 0.5%. I think the CPI is reiterating the fact that we need rate cuts. September rate cuts jumped from 70 to 85% after this data. So I think that is the cause of this green bid. I've been pretty advocate that we're in a really delicate balance right now in the market where if we don't get Fed rate cuts, it's kind of a bullish thing because we know whether or not Powell wants to admit it, it's coming. So they're kicking the can down the road. It's giving the market enough of a reason to keep going up to the right, knowing something bullish is coming down the pipeline. I truly do believe when we do get rate cuts, it's going to be to sell the news events. So we're catching a bid right now. I think by might run up into the September print, and by then it might just be a profit taking fade, etc. But yeah, right now market's green. CPI is supporting that Fed should cut rates, and I think it's 80% chance now, or 82% chance I'm seeing. So it's pretty likely.
Wow. Wow. Yeah, man, it was one of those markets that feels like, or at least it looks like right now, that it only goes up.
Yeah.
We just keep climbing. Let's get in. Before we get started in today's show, let's take a quick second to let everyone know that today's episode is presented by Surf Air Mobility. Surf Air Mobility is transforming air mobility with AI enabled software, electrified aircraft, and a nationwide flight network. As one of the largest U.S. regional commuter airlines, Surf Airlines is creating a platform to redefine the future of regional travel. Learn more at surfair.com. Yeah, man. Big macro day. The CPI is kind of cool, kind of wild. You had a tweet coming off of the July jobs report. So cut 73,000 jobs. And now we've got Fed Governor Bowman openly calling for rate cuts. But to your point, I mean, so is Trump. Everyone is. They want Trump's number one job is to get the interest rates down because he wants real estate prices to go up. That's his main focus, I believe, as far as president right now. But ultimately, if Feds cut interest rates, there's going to be a lot of massive reaction, and I think that's a really hot take that the markets have a sell the news event when that occurs because we're going to be very,
Mhm.
very, very high at that point. um, but also another really interesting thought I have out there, just generally, we know WB, Warren Buffett, right, retired from or stepped down from Berkshire Hathaway's. I think if and when, more probably when, I believe, that our old man starts going to a different level of location, right? It starts going up to the sky. I think that also causes a quick little market sell off. I just don't know when that's going to occur, obviously. But yeah, man, things are looking
Uh,
nice.
I mean, to go off your point though on what the Fed chairs are saying on the rate cuts, I truly do believe that the environment that the Fed board or governors are doing is very similar to high school. Where what are the cool kids saying? Like what should I say? And that's exactly what they're saying. Like all the cool kids, aka Trump, he wants a rate cut. So we're all gonna share that rhetoric. And doesn't matter what they believe in. It's like they're trying to position themselves on maybe I want to become the Fed chair. Maybe this is a power move, or I want to appease um, the man in power, POTUS. But I think you're going to see a lot of commentary in the coming months until the Fed chairs announce of cut rates, cut rates, cut rates, because everyone wants their hand in the pie of I want that slice of that Fed chair because you see how much airtime Powell gets. Like every one of these people, everyone wants to be a rock star. Every
Mhm.
CEO, every Fed chair, that is the stage of being a rock star. Like every month or two, you are on center stage, spotlight's on you. What are you going to do? What are you going to say? And not just that, the power you have where your whole life you were just this boring lawyer or some boring position behind the screen. Now you are the star.
Right.
It's a rush.
Right. It's a really good point.
Mhm.
There's all the memes on Twitter where you see where the guy's watching to see how Powell opens up the statement and it's good morning. And then the market crashes and the guy freaks out because he was betting on something else. Yeah, yeah, exactly. There's a lot of power coming from that one individual's voice. Everyone hanging on every single word.
Totally. Yeah.
So what stocks do you think are going to be impacted the most by a rate cut? Are you looking at any individual ones? Are you looking at sectors?
Uh, Obviously, the ones that are pre-revenue and secular growth themes will probably catch a bid, but they've caught a bid all year. Like I'm thinking space names, quantum, the nuclear names. They've caught major bids where
Yeah.
maybe it's part of the juice on those moves are rate cuts are coming, so it's gonna be cheaper to borrow money to accelerate their growth. But I also think that a lot of people aren't talking about the solar plays. I
Mm,
think Enphase Energy is a really interesting name where they've gone beaten to crap, like hard, bad, justified, but it is looking at that 3-year chart, it's like brutal right now. And I think
yeah.
this is a name that could be a rate cut play because all eyes are going to be on who are the laggers, like which names aren't shitco's, just aren't catching a bid because the higher for longer interest rate environments just penalize them. I think Enphase is one of those names where you can trade it, don't own it. It's a rental, but it might be a name that has a catch up bid on the rate cut narrative and something I'm watching for sure. And if you see the chart right here, it doesn't get uglier than that. I mean, 120s to $30. It's in the past year alone when the market's at an all-time high.
Yeah.
It's a $4 billion market cap. I did not know that. That's crazy. People Finto used to love this name. Uh Everyone was just gaga over, oh, this is the way to play solar when clearly First Solar was the only way to play solar. But yeah, this is an interesting catch-up name.
Yeah. That's a good point. I mean, yeah, 2 years ago, the thing is that in 2023 is at 300 plus.
It's down 90%.
Yeah.
So I think
Yeah.
again, they're trading at 25 times earnings right now too. So it's like not it's expensive for their growth, but
Correct.
also you have to think about interest expense is significant. It's a variable. A lot of the
Yeah.
companies that are under $20 billion is a variable expense, so it's dependent on what the Fed interest rate is. If that goes lower, doesn't matter what the company does, it automatically has a margin expansion opportunity from
Hmm.
there. And
Yeah.
that is something that they haven't had the luxury of the past 2 years. And it's just extra juice. And then from there, maybe, and that's just the OPEX component.
Yep.
Now we're talking demand component. There might be more increased demand on solar products because it's cheaper to finance them. It's accelerating spending on it. So there's a two-edged tailwind for this kind of space. So it's something I'm watching for sure.
Okay. Sick. And I love how you said, man, this is one to trade, not own. Great
Mhm.
tip. Because yeah, you probably do want to own it, but when stocks are just zoof, it's going to take a while for them to
Totally.
recover. Speaking of, probably the one that gets the most discussion right now on Twitter is United Healthcare, right? UNH just getting absolutely demoralized, down over 60% in the last year. It was at 625, now it's at 252. Is UNH done? Is it over?
I signed an NDA. Actually, surprised I can't talk about UNH until summer of 2026. But I will say, uh, technically speaking, I can talk about the charts. It's got penalized bad.
Yeah.
But it's not just them. It's like Novo's gotten penalized. I think
Yep. Eli
there
Lilly.
it Eli Lilly. I think there's something to be said that the rational players in an irrational industry are catching bids. Hims and Her Health is catching a bid. What's the other one? Oscar
Oscar.
was
Yep.
catching a bid. But these like irrational kings in these irrational industries just like are being penalized. Maybe it's morals are coming to light that people like investors care about what they own now. Uh, and I don't know what it is, but I will say though, United Healthcare, Novo, and Eli Lilly, Big Pharma. It's been a tough time for grandpa and grandma on their investment portfolio because
Hmm.
it's been ugly.
Yeah, it's been ugly. We knew it would. I mean, if from RFK standpoint, like he said, he was going to penalize and beat up big pharma. I think a lot of people probably were aware of that. They just might not know it was going to happen directly to some of the huge names, but it is certainly occurring. Other companies that got beat up pretty bad recently. So I know you mentioned this pre-show, Monday.com. I mean, it was down 30% yesterday. Yesterday. Uh, big, 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 big move, huge overnight gap. And there was two other ones 2 days ago that got also just murdered. Trade Desk, which just got added to the S&P 500, down 30%. Sezzle, SEZL, down 30%. Huge moves. Do you think that these are cracks in the market, or these are just these micro plays that no one's paying attention to?
So I think this is the outcome of what I've been saying on the show for months, that the AI tsunami is coming. And it's coming not just for uh, this company, that company. It's coming for sectors. And I think that you're seeing right now for Monday.com is a perfect example. I'll get into that name first because coming out of that quarter, what I didn't see anything about that print that screamed bad company story at all. Like it was a strong print, revenue B was clean, enterprise demand was accelerating. Like this was not an execution miss. It was just a repricing of the entire mid-market CRM space. Monday.com was trading at 40 times their free cash flow entering it was yesterday's print. That was like, okay, that was justified to the point where they constantly beat on their top and bottom line and guide up significantly above their estimates. This was one of the first earnings reports in a while where it was their guidance was kind of tamed a bit. It was like right at expectation. So that was alarming to the point where usually they sandbag and they beat. This time their sandbag was their reality. And I think what's happening here now is the market's finally reconciling valuation multiples with the reality of how AI is going to rewrite CRM economics. Like for years, the moat around that space was about the breadth of the data capture, the size of the sales ops armies that you could support, the stickiness of all the custom workflows that were built over time. That was a pain to migrate your business out of because there was just so much data and organization into that ecosystem that it was sticky.
Yeah.
That model worked because switching was painful, like I mentioned, but the operational burden sat with the customer, so they never did it. But in this new digital economy, the AI tsunami that's coming, everything's going to be AI-driven copilots, embedded workflow engines, and LLM-powered context layers that are just going to collapse that barrier where it's not going to be difficult anymore to migrate yourself out of. And also, headcount is reducing. White-collar jobs are getting lost due to AI being replaced in the stage one of this boom. And I think that right now you're going to be seeing a re-rating on that space where there's there's a decent amount of CRM companies. I think there's only going to be 2, maybe 3 that survive the AI tsunami. I think Salesforce will be fine in the large enterprise space. The mid-market space, I think it's going to be a battle between HubSpot and Monday.com. And HubSpot was supposed to get acquired. I don't know what happened there. The deal fell through. But either way, I think this whole space needs to be trading at no more than 30 times free cash flow multiple. And that's what happened on yesterday. It got re-rated due to the CRM space, not the company. I want to share my screen though, because I shared my model. I updated my model because I think I'm emphasizing more on the software space going forward because I think that's where the opportunity is. Let me share my screen. All right, can you see this? Yeah, I think you can see this. All right, perfect. CRM space. Let's zoom this up higher. All right, so you see the Aerometer score right here. This is our Futurum algorithm score where we factor in EV to gross profit. We factor in revenue. Perfect. All right, so we this score right here, the Air score. This is what's factored into it. It's the EV to gross profit, the revenue growth, the free cash flow margins. This essentially gives me an apples to apples tool right here of how companies are performing against one another based on what their multiple is and how efficient their profitability and growth is.
Wow.
Right now,
valuable information.
Yeah. So right now, the average comp between the 5 public CRMs is around 9. The score is 19. So that's where the benchmark is. After I updated Monday.com, the latest and greatest on their earnings, what's their score? 13. That is a 30% discount to what their benchmark is in the CRM space. That's excessive. So either Monday.com is timing related. It was a very unfortunate earnings report during the time when there's so much FUD around the software space on the AI tsunami that they're just getting penalized for it, or the rest of these names will have to come down significantly. I'm talking Asana. Everyone thinks Asana is super cheap based on 3.4 times their EV to gross profit. They're not. Do you see their air score? Why is that? They
Yeah,
have
I don't think they're cheap at all, man. Like
they're expensive.
they're very expensive. And not only that, you also have to think just from a standpoint of like how sticky is that company? Like how hard is it for it to really revolutionize and change a company and a business and how they actually do things for them to stay with it? Because remember, a
Mhm.
company has to be valuable, has to continue to increase customers and keep them for long periods of time.
Totally. Totally. And I think that right now, like Monday.com and Asana are probably the closest comps with one another. Monday.com has close to 3 times the growth. I can tell you right now, it doesn't show here, but their free cash flow margin is significantly higher than Asana. So I think right here, Monday.com, I'm participating in the trade on this because I think it's overdrawn. That combined with the fact that there is no opportunities out there in the market right now. Like
Hmm.
everything has experienced a multiple expansion or has ran up. The proven winners are being validated by their continuous run up. Even in the pullback we've gotten,
Yeah,
they don't pull back that much. Robinhood, Palantir, Nvidia, Microsoft, like these names do not pull back
at
15,
all.
20%. So like so where's the opportunity? Like right now I have cash coming into my portfolio every month. You have to go towards where's the disconnect between market pricing and what I see in myself.
Hmm.
Money.com is one of them. And that's one trade that I'm participating on. And that's exactly why I'm justifying it, where I think it's a 30% discount. I'm going to put some cash in that position right here. And I think fair value is around 250 just based on CRM comps. So that's money.com. Let's go into the other data space. Let's
Yeah.
go into these are the ones that are also getting penalized. Let me zoom in. All right. So this is the next space right here. So data consumption. So the AI tsunami is coming for data because data is a commodity in the new digital world, and a lot of these software companies can get swallowed up by the hyperscalers essentially, and that's what's happening right here. So what's the outlier on this image right here? Snowflake's actually doing really well compared to other data consumption names, but excluding that, GitLab is at 50. The score is at 15. The comp's at 25. That's a significant discount, in my opinion, where they have a duopoly in what they do with GitHub. GitHub is king, but you have to view it as SpaceX Rocket Lab type of thing, where that's the king, but there is a place for second place in that space, and that's GitLab. But right now they're getting penalized just due to the FUD narrative. And I think that there is code generation is going to be a very real thing in the new digital economy, and I think that GitLab has a place in there. But I think Google acquires them. However, that gives me a high M&A floor as well because someone is going to love to acquire GitLab, and right now it's screaming undervalued. So I'm going to start a GitLab position as well. But the other risk here is MongoDB. This name should not be the most expensive name among this group. They are unproven. They have the same open source problem that the Elastics have, the Confluence have. A lot of the names out there where their open source product is so elite that their AI native customers are essentially using that and telling these companies, it's okay, we'll take it from here. We don't need your managed services because we can do it in-house with your open source product.
Hmm.
Mungit.com should be traded closer to the Confluence and Elastics out there. They're not. I own MongoDB, by the way. So like that's me coming from a shareholder where this is at risk of potentially being a 30 to 35% pullback on this earnings cycle this month or next month, whenever they
Yeah.
report, if they don't have continued Atlas momentum. So that's something that everyone views that, oh, Mongo is like been penalized for years. They have a 7 times EV to gross profit. They're still expensive. And I think that if you price Mongo at 150, it makes sense. It belongs in this batch right here. And I think among this group, Snowflake deserves a 20 to 25% premium among everyone else. And Datadog deserves number two. And that's kind of how I view it as. And I think it's really important now where when you have so much pain in one sector, you have to go not just the technicals because all these charts are ugly. Go to the fundamentals and not just like fundamentals of like, oh, they're trading at 40 times cash flow. You have to compare it against their comps to see what the whole group is trading at and where the opportunity is in that group.
Yeah.
So yeah.
This fantastic segment, extremely valuable, totally useful for all of our listeners. And question, you mentioned this a couple times. So playing earnings, how do you protect a position like GitLab or Mongo database or Monday.com over earnings? Is there something that you do? Is there a way you scale in? Do you use options?
So I hate options on earnings because IV spikes are generating their contracts. So if you guys don't know what the IV spike is, it's the Greeks or like the when you pay a certain dollar amount per contract, it's usually juiced up a little more than what the normal price is because earnings are volatile and the option market is not, they're not schmucks. They're pricing in like, it's like gambling a bit or surge pricing, for example. When things are super busy, when you want to get a ride, they charge you more because there's not, they know that you need a ride right now and they want to squeeze as much out of you. The same thing in the
Yep.
option market. So I think that earning options via earnings is a no bueno. Don't do it. But if you are feeling extra bullish on a name, there's nothing wrong with like positioning on a comment. If you're feeling a little squeamish, like for me, I'm a little worried about Snowflake and Mongo because you saw they're clear outliers. I might take some cash, sell 10 to 15% of what my positions and put some cash on the sidelines. And if I'm still bullish long term on the thesis, I'll use that cash to capitalize on that dip. And then it's a win-win where if I'm
Mhm.
wrong, 85% of my position still in and it's going to run up. If I'm right, I took 15% off and now you use that capital to buy a fire sale potentially. So I think
Yeah.
do it comments, don't do it via options.
And do you wait for the gap down, like at market open, or do you play any like extended hours purchases and put some limit orders out there?
So I think for a lot of the retail, they should do the 3-day rule. Essentially, the 3-day rule. What is that? It's like the universal code where if like a trade desk company goes down 40%, you wait 3 days to see what the price action is from there because that's a massive move. For
Mhm.
me, I come from the corporate world and I help create BS to the C-suite on conference calls, so I know what language to look out for. So for me, I have like a little more expertise on like, is this real? Is this BS? Is this something that's controllable? Is this something algo driven? So like I like to participate right away potentially or pre-market next day. But
Yeah.
for the vast majority of people, wait 3 days. It's a
Yeah.
massive rule.
So you're talking about AI tsunami. Is there why are certain AI companies other than like Nvidia, Micron, and like the chips just getting crushed? So like C3.ai, right?
That's
Down
a shit. That was always a shit code. That was like the biggest fugazi ever, in my opinion. I was so open about it on the show too.
you were,
Every,
you dude, you
every,
slayed it. Man.
everyone kept saying there was like next Palantir. I'm like, guys, they have a great ticker, and that's the probably the most valuable part about their business. That ticker. That's it.
Yeah. I love it. I love it. They came out early. They didn't do anything great. What about Tempest? You big fan? TEM?
Yeah, I think Tempest is a big one, mainly because healthcare AI is something that is going to change no matter, like, it really is going to change. It's a big initiative from the government. And I think that if you're going to pick a player in that theme, pick the category leader. And that is Tempest AI, where the mountain of data that Tempest is sitting on is the real treasure trove for that business model, where data is the fuel for the AI engine, and especially in healthcare. And I think that Tempest built that infrastructure to scale AI in healthcare better than anyone else in that space. You saw with that $200 million partnership with AstraZeneca, and I think
Yep.
that they're developing the largest oncology AI model ever, and they're becoming the go-to leader in AI-driven diagnostics. So when you have this massive push from the government on AI in healthcare, their first place is Tempest, clearly. And it's not just that they're modeling, like, we're talking about an AI foundation model that has the power to process over 350 terabytes of clinical data. That's just the beginning. That's just the tip of the iceberg. That's why that image you see of the iceberg, everyone sees the tip, but there's a mountain underneath it. That's literally Tempest, because I think that a lot of people don't realize that over half of the US oncologists are using it. Over 70% of academic medical centers are using it already. They're embedded in so many clinical workflows already. And AI in healthcare hasn't even really started yet. So I think it's the kind of flywheel effect that will allow Tempest to scale and dominate in a way where it's a first mover advantage. And by the time that AI in healthcare scales up to semi-maturity, it's too late because they're just so
Yep.
far ahead of everyone on the data front. And I think that they're poised to lead this AI theme in healthcare. And I think that's this is a name that you have to be patient for. Is a reason that the GOAT Nancy Pelosi, I think, invested in this company where she doesn't invest in companies that are under 10 bill. She doesn't. Sorry. Spoiler alert, she doesn't. It's the Broadcoms, it's the big CrowdStrikes, the Microsofts,
Nvidia's. Yep.
Nvidias, etc. This is an outlier. Why is that? There's going to be regulatory push, I think, in healthcare, and especially for AI for optimizing it. And I think they're going to be a $50 billion company in a couple years, and it's one position I've been building up significantly this year because of that.
It's amazing, man. I love that. Again, really, really relevant, extremely valuable information. And that's a really good point too about the whole. I mean, Nancy's the best day trader in the world, right? We always make that joke, but she does, man. She plays the huge companies, the massive, massive ones. And Broadcom has just been an absolute monster.
Mm-hmm.
Really, really powerful trend, incredible stock. They are just dominating that space in a big way, along with Nvidia, Micron, which all these companies are gapping up right now because of the CPI news. Before we get into our earnings preview segment, though, because there are, and we just discussed some companies that had earnings recently: Trade Desk, Monday.com, C3.ai. Let's go ahead and dive into a quick message from our partners over at Gemini. Investing in Bitcoin has never been easier with the Gemini credit card. You can earn Bitcoin back on everyday purchases like gas, dining, groceries, and more with, ready for this, no annual fee. Sign up today at gemini.com/CryptoTwits for a $200 Bitcoin bonus. Who knows how much that could become over 5 years? Of course, terms apply. Invest as you spend with the Gemini credit card. The Gemini credit card is issued by WebBank. See rates and fees for more details. Sign up today to earn a $200 intro Bitcoin bonus when you spend $3,000 in the first 90 days. Promotional terms apply. The Gemini credit card is issued by WebBank. See rates and fees. All right, legends. So, some interesting earnings coming up. I would love to start with eToro, which is and did report this morning. eToro had a very large down move on Monday, down 4%, and it had a big spike on earnings. It was at one point over 60 pre-market, and now it's all the way back to 55. Do you have a take on eToro, Webull? Is that going to affect those, or is Robinhood just going to continue to dominate that industry?
So, I mean, I think Webull, everyone be cautious on Webull. It's a China parent company, is like very heavily involved. I think it's too much Eastern world and influence for my cup of tea. But eToro is a really interesting spot because they are, in a way, trying to combine Instagram and Bloomberg into one product where it's trying to become a financial like type of data company with influencers involved. And I think it's very clean UI. You guys hear the CEO come on the show talk about, you hear his passion and like what he's trying to disrupt in the space. And I think the democratization of investing is character change that's going to be permanent. It's not going to be like a one-off. So I think that eToro's in a really interesting position to capitalize on that. And monopolies aren't a thing, guys. Like there's always going to be multiple players, and like even though Robinhood is king, there's going to be a prince in that space. And I think eToro's earnings reports, I haven't got dug into it too much, but service level, it looked clean.
Yeah, I agree. I mean, over top, they I mean, I don't know if this is how totally accurate this is. Like to your point, you used the word sandbagging earlier. Like if they sandbagged their estimate of 200 million and they reported $2 billion of top line revenue, that would be fantastic if that was really cleanly the point. But that's what we are listing on TradingView. So a surprise estimate of 1.9 billion, always a good day when that happens. But the pricing at like 55, I mean, that's where we had a really beautiful bounce in July from 55 to 65. Never a bad place to buy low, sell high on eToro. That was a really, really beautiful move. What else? Circle, CRCL, which I still can't figure out exactly what they do or how they precisely make money. But Circle also reported earnings and is also up about 14% in this AM trading session.
So, I mean, listen, Circle is a lever on crypto. What's happening on crypto? It's freaking on fire. So I
Yep,
think that Circle is. I'm bullish on stable coins. I don't know who's going to be the end up being the winners, but Circle is their valuation doesn't make sense because I think that you need to use Coinbase as a comp for them because Coinbase makes a huge chunk on what Circle does, and it's
correct.
significantly cheaper than Circle. So like I think Circle that proves to me that Circle really is a primarily a lever on the crypto uh, sentiment. And right now, even during that pullback, like we had in the market, like Bitcoin didn't budge. It didn't fill that post-election gap at all. And I think that we are setting up for a much higher um, crypto environment. You're seeing Ethereum cross 4,400. You're seeing Tom Lee participate in that. You're seeing Peter Thiel participate in it. Like these are heavyweights now that are participating in these themes, and I think that it is one of those area. It's cyclical, but when it's running, it runs. And I think
Yes.
that we haven't had that blow off top yet. We're just like kind of getting formed up where
Yep.
things are about to get wonky, and Circle will benefit. You're going to see Coinbase benefit, Robinhood benefit, BMNR is going to benefit the Ethereum treasury. Like, just look at that move. And it's just crazy. Like, they announced, I think they just announced this morning they're going to potentially file up to $20 billion
Yeah.
to get buy more Ethereum. So, like,
Yep.
it's bullish environment right now.
Yeah. Yeah. And I like how you mentioned Coinbase because that one's an interesting one. Like if you go look at some of the intermediaries between the retail markets and the stock market or the options market, Schwab, Interactive Brokers, those companies have absolutely crushed. I mean, up hundreds of percent in the last year. And so Robinhood also joining that list. You mentioned they are king right now and they are really dominating that space. But Coinbase, I mean, they own a lot of crypto, duh, and they are making beautiful returns regardless if the market's up or down because of just straight commissions. Their earnings were quite nice. I mean, they estimated to do $1.29 per share of revenue, earnings per share, and they did $5 and some change, which was really remarkable. But Coinbase did gap down. It moved down on earnings because it went from 420 to 300, which I think was a little bit of an overreaction. So me personally, I'm finding a good spot to just slowly start accumulating some Coinbase down here as earnings looked good. I think the 400, 420 price was just a really good technical spot to sell, right? That previous
Mhm.
all-time high, that IPO level where everyone's kind of jumping on the bandwagon a smidge too early. So it was just a really good overreaction on pretty decent earnings. So if you are looking to buy Coinbase, me personally, I'm accumulating it in and around the $300 area.
Look at
Let's see. Go ahead.
look at ASTS right now. If you want to pull that up,
Ooh.
it's flying.
Yes, it is up 16%. This is an interesting gap with 4 down days in a row. So you had down day on Wednesday, Thursday, Friday, and Monday, gapping up today. So this is something that I personally refer to as a gap and go. If you're day trading, right? For day trades, it just simply means that you're going to have a lot of shorts getting squeezed. This is a big trending one though, because bro, you made more money than these guys did last quarter. Uh, they only did $1 million and some change of top line, and they thought right their expectations were 6.6 million, which would have been a little bit better. Only did 1.16, so they missed earnings pretty bad and still gapping up. So that to me says that people love the space. You mentioned the industry, in the onset of this call, the space industry just a little bit. Like this is going to be one of those names and leaders that probably after earnings like this with a miss and a huge gap up, probably is going to continue higher.
Yeah, I mean, I think it was really important. There was a gap down right when the print hit, like you mentioned. There was like
Yep.
a miss on the fundamentals. So I think it went down like 7%, but now you're clearly seeing it up 16% now. So that's close to a 25% move. And I think it's because the core thesis has not changed after that earnings report. And they're building the first truly global broadband network from space direct to unmodified devices. And I think that earnings call was super bullish. If you didn't listen to it, you need to listen to it because I think it's underscoring how much closer we are from this just being a narrative stock to an execution stock. And I think that the manufacturing cadence is very real. I think the satellite design has taken a huge leap in capacity. And I think the scale of the build out, 45 to 60 satellites by next year, now feels operationally
Doable.
a reality.
Yeah.
Exactly, because of
Yeah.
$1.5 billion in liquidity they have right now. So that was big. The biggest call out for me, though, was the government momentum this
Yeah.
quarter. Eight U.S. contracts to date. I think they have some tactical demos with actual branches of the armed forces, and their pipeline. They're confident they can evolve to a full program of record scale, and I think this isn't optionality anymore. Essentially, I think it's a parallel business line with accelerating budget tailwinds, because we've been saying the DoD budget will increase incrementally year after year, but the weight of it is going to go towards the new age defense. That's going to be space. And I think that there's only really two tier one players in that arena. If you saw Redwire last week, you exactly know why they don't belong in the same space as ASTS and Rocket Lab. There's only two right now in the public markets. And I think that, yes, they're expensive based on traditional metrics because they don't really make money. ASTS doesn't make money yet. Rocket Lab is trading at an expensive premium, but if you zoom out a bit, it's a $2 trillion economy in the next 15 years. These companies are worth 20 billion each, and they're the early disruptors, category leaders. So I think that it's important to care less about the numbers and worry more about the momentum that they're building in their earnings
Mhm.
report, because that's a real asset here, and it's moving in one direction towards execution. I think that's why it's catching a bid today.
Yeah. Well, one of my mentors, Dennis Dick, told me it's all about the story, right? Like, is the
Mm.
story hot? Do people like it? Are they talking about it? Is there a future where it's unknown? And is the trend currently bullish? And if it is, it's like, hey, listen, take some profits that you make, take some, operate like a business. If you have free cash flow, and you're like, wow, I made XYZ percent on whatever company. I made 15, 20% return this quarter, this year, extra or additional. Take some of that profit and invest it into these wild spaces that are definitely unknown, but there's an unknown there. The future's not unknown, meaning like we know we're going there, kind of like quantum computing, right? IO and Q, a few of the names, the AI names, like the TIPS names, the healthcare names, like we know that that's where it's going. So even though we don't know exactly what the company's going to do, you can take profits and invest in those companies. And so to your point, like Rocket Lab and ASTS have done incredible over just the last 4 months.
It's because we're in this environment where I don't think there's ever been this many super cycles happening at the same time. It's not just AI. There's quantum. There's space. There's electrification. Like, guys, before this, like there was cloud. The cloud was a really big tailwind. 3D printing was a dud. I think there's like these moments where we're inflecting as a society to improve in such a drastic way that it feels too good to be true at times when you find these companies are like I've been a Rock Lab and AST shareholder for a while, IonQ as well, where it's all about, I was like, this tech is incredible. If it works, it's going to be massive. It's showing it's working, it's validating it. And I think that we haven't even touched the surface on the commercialization yet of these companies, these products.
Mm.
IonQ had a really bad earnings. They didn't have a great earnings report last week. They didn't care because, again, momentum is the asset here now. All these three companies were, what's the business momentum? Is it getting closer to point A to point B from point A? If the answer is yes, multiples validated, and they're going to continue going up to the right because it's a $13 billion company. If quantum becomes what a lot of people think it's going to become, the only variable is the timing component of it.
Right.
It's $13 billion and it's the best pure play out there. Everyone else is a niche play or something that's just not going to have the scalability as IonQ does. They're going to continue catching a bid. And I think that you're seeing the appetite now for these like big themes start trickling in on the institution side. And
Yeah.
that's why it's accelerating more. It's the same thing as Palantir. Dumb money got in at a reasonable multiple. Institutions are paying the premium now for that. Same thing's happening with these names. I think that's it's great. The retail is winning. I think it's democratization is incredible. And now you have to ask yourself, like, you've seen that these are the winners. People want to participate now, but they have not had that pullback. Like you've had two black swans in the past year alone where you could have. Young carry trade crisis and terraforms.
Yep.
People, when they see blood in the water, they go on the boat and freak out until all the sharks clear out. For
Yeah.
me, I freaking dive right. I love that. That's when I get excited. I'm smiling. You guys saw me every morning. I was here. I was like
Oh,
smiling my teeth.
oh,
Like, yeah, it's pumped because there's opportunity here because this is short sighted. But now I'm like, ugh, everything's run up, so there's not that many opportunities out there. But etc.
yeah.
These are momentum plays and
Yep.
factor business execution, not fundamentals.
Yeah, man. Do you ever sell puts to get into your stocks, or do you just buy the shares?
I know you could. You should. For me, I have a decent amount of cash that comes in every month, so I don't feel the need to. But there's nothing wrong with that. I think my partner Daniel at Future, he does that. I know a lot of really smart people do that. Uh, it makes sense. Like if it goes down to a certain point, you have a price target. It hits that price target. Yeah, you'll love to execute and buy those shares. For me, I just like it's too slow. I want it right now, and I want it
Yeah,
ASAP.
totally. Yeah, I love it. Well, we got one other one that we haven't talked about yet. CoreWeave, CRWV, reporting tonight. They are definitely riding the AI infrastructure wave. Are you expecting them to keep pace with the hyperscalers, or is hype starting to cool?
CoreWeave is capitalizing on the imbalance of supply and demand. So there's a demand surplus right now, and I just don't know if this is a rental or like, I don't know if this is just a hold for 2 years or it's gonna be a long term hold.
Yeah.
And I've been wrong about this stock because I think it's just it's a broker end of the day, and that business model is brutal because they're gonna constantly have to pay up for the latest and greatest, and there's gonna be zero margin expansion opportunity because of that. It's essentially you have a lease on a car and you'll never truly get good value on it because every 3 years you're going to buy a new car. So you're constantly get the depreciation is going to continue, and it's like a little wonky. And there's an essential relationship with Nvidia as well. So like for me, it's a $68 billion company on what I believe is they're capitalizing on a moment, not really a moat or a theme. And I just like why bother? But clearly it's another lever on AI, like Circle
Yeah.
and CoreWeave. These are levers on crypto and AI on new IPOs. So I think they're just being used as a trade component as well, not really a long-term thesis. And it's worked. They're both 4x.
Yep. Yeah, me. So I was wrong on this one also. I mean, I just haven't participated in it, but yeah, I mean, it's a $68 billion market cap. Feels a little high to me, at least. But hey, there's always room for everyone to play in the pool, especially when the pool is abundantly large. Here's an interesting one, Shy. Reddit. Reddit's back to its all-time high area of 230.41. They had their earnings. They crushed. Stock hasn't looked back since. What's your take on Reddit?
So Reddit's really interesting because data is the fuel for the AI engine for LLMs. Nobody has better data than Reddit. And what I mean by that is nobody has better real, authentic sentiment data that can actually
Mm-hmm.
improve the quality of a model.
Come on,
So
dude.
their licensing was a huge pivot on their business structure that happened like a year ago or so when the LM arm race happened. And I think that's why it's catching such a bid, where they're the number two name in the space behind Meta, in my opinion. And I think that's you're seeing how much runway these LLM arm races going to have. It's not anywhere close to finishing. We're actually more in the early innings and late innings. That Reddit is just going to be the perfect, not middleman, but like essentially the bank that gives them all this data that's going to help improve their wars that they have with each other. It's like the picks and shovels play for LLM arms race. And I think that for me, when I worked at an entertainment space on the corporate strategy, like whenever we dropped an IP or any kind of like a trailer, the best data read that we always had to go to share to the president of the studio, to share with the director of the movie, the actors, was Reddit. What are people's reaction to that IP and to the trailer? And we actually, or my team specifically, we modeled out what the box's office will be a year from now, just based on the sentiment read from Reddit. And
So cool.
we had a bunch of data readouts historically that we can like price into it to make them pretty accurate.
Yeah.
So I think that Reddit, again, that shows that they're just a necessary variable in the formula for these decision making for so many industries. And I think that $40 billion for that long term, I think that's not the worst price to pay. But I'm not super bullish on ad techs. That's why I'm not in it. But it's definitely found a niche in this new digital economy. Like the AI tsunami won't eat them up, for example.
Yeah, I love that, man. That's a really, really great take. And the other one that you mentioned, Meta, I mean, it's headed right to 800. It had a beautiful on a daily chart, just from a technical analysis standpoint, had a really, really fantastic what's called a pennant pattern, where you had a bunch of compression after they also delivered a rock star earnings, reporting 47 billion in revenue, reporting $7.14 per share. And they just consolidated for an entire week. And then today we opened above the high of yesterday with, again, another gap and go, and just really started pushing hard. Anyone shorting Meta. But now we're headed to 800. Do you think this stock has a split coming up soon, champion?
Yeah. It's interesting because I think that a couple years ago, I would say yes, but you've noticed that the recent splits that companies have had has actually been pretty bearish on sentiment for some reason. I think SMCI, obviously SMCI is not a great company in my eyes, but I think sentiment for splits aren't there anymore. And for the executives and board of directors, I've been in those meetings, like they don't love their stock price being lower because it increases volatility, and for them it's just a headache. They care about business execution. They don't want their stock price to be volatile or participate in option traders or all that stuff. They want just
Exclusivity.
yeah, exactly. So that's why you're
Yeah.
seeing Mercado Libre never split. You're seeing Meta probably. Big tech might be different because like you can only move the stock so much where it's a $2 trillion company. There's not going to be too much volatility. So maybe Meta does, but I think like for the Mercado Libres and Axons, like those kind of names, like they're not going to. It's just too much of a headache, and I don't blame them. But for Meta, like I missed this one. It's one of those names where I had a good opportunity to get in at 400, 500 bill. I chose the trade desk to get my ad tech exposure. Clearly, that was a huge mistake, and one that you learn from. Like this
There
is
you
why
go.
like sometimes just invest in the best. Don't go for the pure name. And
Yeah. Yeah.
well, what a mistake that was.
Yeah. Well, hey, man, we all make them. But one thing you did not make a mistake on, you mentioned it just a moment ago, SMCI. You've been pretty blunt on SMCI for a while, calling it a commodity business. Right now, it's having falling gross margins and even some accounting red flags. Do you have any long-term bull case left here, or is this strictly a short-term AI play at this point?
I think they're in such a commodity of a business that why bother? I
Yeah.
think right now, like 27 times earnings, that's not that cheap. Like it really isn't. And I think that their gross margins is their tell on what's their pricing power and if they actually have a moat or is it a commodity. They had a first mover advantage in what they did, liquid cooling. Went from 15% gross margins at the time. Now it's 9%. Why is that? Because the Dells and the HPEs out there, they can essentially offer what SMCI is offering at a discounted rate because they're not a pure server business. They have other features in their ecosystem that they can leverage, capitalize on. Like, oh, I will undercut SMCI's 20%
Yeah.
pricing because we'll offer this bundle where you'll make it up elsewhere in these different products that we currently have. That's part A. Part B is customer service is huge on these companies. SMCI, I've heard from people on the in that space, awful customer service. It's all about speed with them. They could care less. Like once you get the product and get it running, they could care less about QA, quality assurance. Like they don't
Yeah.
care at
Yep.
all. So as a customer, it's a headache to deal with that. Rather go for HB and Dell. And I think for this company, it's just a lever to pull on an AI narrative. But even then,
It's a weak
it's just
narrative to pull.
it's a weak narrative pull. And also like you have to trust the numbers. Like their big four law firm, accounting firm, I forgot who it was, dropped them. Do you understand how hard it like they only care about money? You had to pass such an egregious line that there's like we can't associate ourselves with them. We haven't gotten to light what that is yet. I think there's a lot of fugazi that's happening where they haven't communicated, but it must have been bad. So like I don't believe the number. 27 times earnings, I don't even believe that number. It could be much higher.
Yeah. Fascinating. Really, really good. And Dell, man, yeah, to your point, what an absolute rocket ship during the tariff war. To your point, like the blood in the streets, the sharks are out, everyone's terrified. Dell drops to 70. Is it 140 presently? I mean, that just a remarkable turnaround, as most of those companies did, right? Micron Technology and a few other ones. But Dell has just been a great name with absolutely no real pullback in the last couple of weeks.
I mean, it's what old is blue. I'm telling you, the renaissance has had for these names. So I think
Yep.
it's it's a good thing. It's justified, but I want a pullback. I'm fishing for some
Me too.
like everyone. I want to pull back so bad.
Yeah.
I want some pain.
Yes. Yes. We're just trying to figure out what that's going to be, right? What's the headline risk that's going to cause an
Well,
actual pullback in the market?
that's the thing. Like it has to be a new variable that the market hasn't factored in yet.
Correct.
Right
Correct.
now, we've had so many variables and we've gut checked it because AI is the main event. So like that's really holding the market and it's going up to the right. It's justified because we're seeing some crazy earning expansions on big tech. This
Hmm.
cycle of like it felt like an inflecting quarter where we finally saw an ROI on this AI spend with how much the bottom line improved for a lot of these names. But the Black Swan event, what is every year something in August, September happens of a headline that causes a new FUD. Like you saw Young Trade Crisis, it was a year,
Yeah.
the 1 year anniversary, I think, is like soon on
Coming
that.
up. Yep.
Yeah.
Coming up.
So we'll see. Maybe something some geopolitical tension that hasn't been a reality yet that hits. Maybe the Fed actually aren't going to cut rates in September, even though it's an
Mm.
80% chance. Like who knows what's going to be, but I have dry powder ready. I'm capitalizing on like some short term rentals on Monday.com and GitLab and Palo Alto, but it's definitely something I'm monitoring.
Love it. Well, ladies and gentlemen, thank you so much for tuning in. The best news is we will be right here monitoring, discussing, sharing, and discussing what is happening, what will happen, what could happen. We're going to look at it. We're going to keep you informed. We're going to keep you engaged. We're going to keep it tuned in so that you can not only benefit, but can also get more information, more insights, more power, and more actionable tips from the crew as we continue to pour in great content, valuable information for you. Thanks so much for tuning in. Ladies and gentlemen, you are incredible. You rock. Have an incredible rest of your Tuesday, and we will see you at 9 a.m. Eastern tomorrow.